Well, good afternoon and welcome everybody to today's market roundup. Joe with you here on September 12th, 2019. Another Thursday came and gone, moving through yet another month. This month has been moving faster than I remember it. It just seems like I was waiting for September to happen, and here we are, already a week away from options expiration. So, more about halfway through the month here. So, let's get right on it. Well, guys, we're going to be talking about the markets, a breakdown of what we see, what we can expect. I got a couple trades we can take a look at, just whatever you get from this Roundup course. Run it through your own risk parameters, check it against your own trading plan, see if it fits. If it doesn't, don't trade it. If it does, all right, do it, but do it your way. Take responsibility for it. Let's get a quick breakdown of the markets. They continue to be very aggressive, very strong to the upside. We've had a pretty good move this week, especially the last 2 days. I mean, that is technically a gap to the upside, even though it did end in a pretty good doji there, just shy of resistance. We didn't quite touch the 30, what do you want to call that, 30-25 level, but we did push above the 30-20 mark by about 74 cents. So they're strong. The markets are showing strength. They're really reaching, seeing if they can't get up there. The reasons why are few. Or I shouldn't say that. I should say the reasons why are many, but none of them really hold any ground. There's no fact behind it. It's still hearsay, expectations, thoughts. If this happens, then maybe this is why this is going on, so on and so forth. But nothing solid. Which once again, total normal, and I think that's what causes the volatility that we've seen over, well, I'd say since the beginning of the month, the end of last. So we don't expect that to change much. Tomorrow being a Friday, I imagine we close somewhere right around the range of today. About anywhere between 3,000 and 3020 would be sound and make the most sense. Taking things like that into consideration, guys, you always try to ask yourself, what's the behavior of the market least likely to be predicted in this situation? And that would probably be a gap down or a move lower. Or, in this case, the last 3 days, out of everything I've heard, is that it stayed this high and it's actually reaching up new highs. So, ending within today's range, highly likely. Going outside of it, almost guaranteed. I wouldn't be surprised to see a gap down, have it climb back up, or a gap up and have it come back down. But taking a look at where we finished, 0.17%, 0.29 and 0.3%, I think we get those numbers again. Maybe a little higher. Once again, I could be dead wrong. Maybe we break into new highs and people have to stew over it over the weekend. Either way, it'll be pretty interesting to see. I'm not seeing anything in the news headlines or expected announcements that could really carry this forward. Maybe something I've missed, but nothing right offhand. I think next week we're going to have some pretty big pieces of news. We got a FOMC statement. As well. So we'll see if we're going to hold off before this thing makes next move, or we do something, like we did today. A big move up, came back down, and then we finished flat, but a gap overall. So I know that was a long way to say I still believe the markets are going to be volatile. I still think they're going to do this gap around, up, down move, and but probably end up going nowhere. So we should stay within this range. All right, let's get moving to the next slide here. As you can see, the heat map, everything behaved exactly like you'd expect it to, with a small percentage gain overall. I wasn't sure if I didn't get to see if the Dow, I imagine all three of the markets did move a little higher, gap up, and then came back down to close pretty much flat. And you can see very mixed. Lots of reds, lots of greens, lots of browns. It's pretty balanced. I'm looking down to the right side. I'm seeing industrial goods, kind of a little bit more on the bear side. Healthcare, a little bit more on the bear side. And basic materials, take a look at that up there, more on the bear side. All the stronger side is going to be a little bit more financials, technology, stuff like that. So nothing too big, though, to really, especially when the market's closed flat. If the market's closed on their highs and we got this map, we could get something out of it. Or if the market's closed on their lows and we got this map. But the market closed flat, so I think what was overextended actually pulled back, and whatever was weak probably bounced. With that being said, I did find some pretty good trades. All of these we looked at in Wednesday's class. Oh, I liked them a lot. A couple of them triggered. A couple of them did exactly what we were expecting them to. Let's start with PG. This is one that I liked because it was a nice uniform bull pullback. Beautiful established support level at the 120 mark. We were talking about it in Wednesday's class. And the expectations were, well, something that shoots up back up to previous resistance. I even drew a line saying I could see it. You could even target 125 in the next couple of weeks. I'd be fine with that. I still believe that. It'd be kind of neat to see a gap up here and some resistance, because what's screaming at me right now, folks, is a 120, 122 and a half, 125 butterfly spread if it's available. If it's not, then you probably want to do something like a 120, 125 diagonal spread, something like that, because you want that chunk of change in the money, because this could base for a while and then maybe move higher, and that 120 will feel nice if you have it. Now, next week is options expiration week, so this is something you could set up tomorrow and have a full 5 days for that 125 decay, or find something around the 122 and a half mark if it's available. This might even have dollar strikes. If so, 123 would be a good place for this. Maybe a 121, 123, 125 butterfly spread. Did I get that right? Let's see, 1, 2, and then 2 more. Well, maybe 121, 123, 125. That's right. I think that sounds right. Well, if it's not, get it so they're equal. But it's a pretty good chart. I still like it. One thing that I thought was interesting is the volume. The volume's moved a little bit lower over the last couple of days, so it seems comfortable above 120, but not too anxious to break into new highs. So play around with that one. That's kind of a fun trade. Let's look at ZBH. This one was a beautiful high base. Drew the lines across it and said we could see a breakout. We've seen some head fakes in the past. You guys can see here the beginning of August, and then the mid-August, and then at the beginning of September, a doji even a few days ago, and then even yesterday, where it had this confirmation of doji. Now it's gapped up and it's staying up. So this is a nice high base breakout. Play it between the 140, 145 mark. Sure, sideways to up. Good trade, good opportunity. I like this. On the bear side, Square continued to work for us. It was triggering yesterday. It triggered where we're discussing it. It confirmed. It looks like it's rolling over. What's neat to see is it's breaking that support set in June, and then set again early August, and then again mid-August, or end of August, I should say. And it's also breaking a 60 support level, and with increased volume, slight, but it's increasing. Now, if you guys feel you've missed this, we can just dial it back, play a bear call spread on it. 60-55, or 60-57-50 if they have it. If you want to stay a little bit tight, it's already there. But something credit side, something slightly down to credit, but still good. Now there are other trades out there. Those are the ones that I just pulled from the class. Keep your eyes out there. Stay sharp. Don't be sucked into too much of this gapping up and down. I've had a few coaching sessions today, and we in which we discussed. It's really hard to gauge a direction for too long, and we looked at some charts, and you can see that the answer is not really. If you're sideways to up in a strong chart or sideways to down, the last few charts I showed you, consecutive days. However, you have to sit through massive volatility, an up day here, a down day there, back and forth, so on and so forth. But if you stick to the overall trend and believe in your trade or your combo, then you should be able to stomach it. That's why we follow trading plans and not reactions. So, all right, folks, that's what I got for you today. Another Thursday's coming on, and I will see you next week. If you guys need anything, you know how to get a hold of us. We'll talk to you next time. Bye, everyone.